Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Friday, April 28th. First, now we are going to start with economic data because today is super important. PCE, core PCE, month over month, flat, as expected, and year over year, it's still increasing, but lower than before. This is not good. We were expecting the core PCE to be a little bit lower, 4.5. We got 4.6, and that is not really positive, despite the fact that Chicago PMI and consumer sentiment show signs of really confidence on the production, manufacturing, and also on the consumer side. I think markets were waiting for a little bit more of slowdown on the PCE, but at least personal spending came flat, 0%, and month over month, that's spending, the income 0.3 instead of 0.2. I mean, this is not really good for inflation, but as I always mention, this is not only right now, currently, we are not talking about inflation only alone. We are talking also about recession, and we have to have an equilibrium regarding our interpretation of this economic data. The economic data is mixed towards the positive side because it avoids recession. But let's now take a look at how earnings went, because that's also part of the outlook from the big tech regarding the economy and recession. Amazon stock beat on both EPS and also revenue, but it really was looking good, but then it dipped the entire move due to the poor outlook from the cloud. The perspective, it's just that it's going to decelerate. AWS rose 60%. That marks a deceleration from the 20%. And also, if we check Amazon after hours action, we can clearly see that was a big rejection on the conference call. We got the earnings here, everything was good. We were waiting for the earnings call, and then the CEO said that the outlook he's already seen deceleration, and the Q2 in April, they are already seeing less growth. So this was back to flat, back to start point, and into the open. It was really feeling the pressure to the downside, and we are barely holding, at least for Amazon. We are gapping down. Amazon is minus 3.82, but this is not the overall market. Our market is really green. We are going to see that later. Let's continue with Intel, that they really beat market expectations. We are going to see the huge bullish chart. But for now, let's say that they actually factually reported their largest quarterly loss in the company history. Even though they are beating expectations, they are feeling the pressure from the consumer side. Let's see the chart, because it's really, I mean, these earnings are nuts. So look at this. That was the initial reaction to the downside, and then it gapped up. Right now, we were in this descending triangle. We were trying to go higher, but certain sectors are pulling back since the open. A lot of stocks were gapping up, but they are retracing their move due to some economic data that was reported after the open. Intel is still 4.3% in the day. but if we check since the open, it's just 2.61. So be careful with your expectations and the way you are seeing the markets, because it's not everything what it's look like. We have to really digest certain things and really evaluate what is happening in the economy. Quick ones: Snapchat basically missed on revenue, flat on EPS, and it's really feeling the pressure on the consumer. Why? Well, basically, we are feeling this is not the only one that is feeling this kind of social media pressure and ad revenue deceleration. Google felt also the same, but I really think that this kind of low market cap but big companies are really feeling the pressure, and everything that we are seeing in the overall market is due to the big, huge, giant tech companies pushing the market up on this bid on earnings. Some other things: Pinterest dropped 8%. Snapchat, we were mentioning that 20% to the downside. I mean, they are T-Mobile declined 2.5%. So it's not, you have to really dig from the surface to not focus only on the big tech. You have to really assess all the companies that form the S&Ps and the market to really assess that. Let's talk about two big oil companies. Chevron tops estimate with Q1 profits gain despite oil prices going down. So, wow, net profit climbed 5%. And Exxon, it's also record profit. So you can already see where I'm going, right? So big tech companies, big oil companies reporting earnings is not about inflation, it's corporate greed. And these big tech companies, honestly, they are an insanely PE ratios, an insanely high equity risk premium, and I think their valuation are too high. And once earnings finished, we are going to see a big correction. Until then, we need to be super patient, because anything can happen in the markets. Things like this one. First Republic FRC is crashing today. If we check the chart, at some point it just, FRC right now is 40%. At 10:30 it gapped down twice and it dragged down the markets with it. So 10:30, big. They retraced, the Nasdaq retraced the entire move. And despite the fact that another bank is collapsing, we are still seeing this. So what is fueling the market? I think is greed towards earnings, end of the month, Apple earnings next week. So be careful, because market is not only the economy. Right now, there's a tricky situation in which there are certain signs of recession, but the market keeps going up, up, up. And that's insanely dangerous and against everyone's mentality. So let's now focus on the Nasdaq technical analysis, because this is, I was not trying to go long. I was waiting for my short. But again, this setup, ABCD, break of descending resistance, and I took with one contract this move up to the long side until this 30-minute resistance that we got from yesterday. I left on the table part of the move, but I mean, I was not expecting this skyrocket. Then the FRC happened, and I don't know what to do. I'm not the only one. People is just freaking out. because another bank is collapsing, another bank being rescued by the FDIC, and XLF still going higher. How many banks we have to see collapsing until we see, okay, the economy maybe will be affected, and we are kind of seeing 2008 situation? I don't think it's that bad, but I mean, this is just super choppy. Overall market just wants to go up despite the fact of a lot of signs of recession and bad economy. It doesn't make sense. I'm just trying to day trade some technical setups, but it's just insane, the situation of the current market. And I think part of the reason why we are in a very choppy, volatile, and nonsense market is due to the zero DTE options. But at some point, that bubble will explode, and the regulators have to do something. Copper, Dr. Copper. So looks like if we check the 2-hour chart, we can see that we are still trying to find some structure in this downside move, and we are still holding this, but I don't discard. I still think we are going to see continuation to the downside, but we just have to be patient to really see the economy collapsing and the economy going down. Until then, well, copper is just showing signs of consolidation and holding up. The same for gold. It's just trapped in here. Fibonacci retracement, 61.8 retracement will point towards 1900. And I think there's a lot of bulls, a lot of demand down here. But this will drag down the market. So still patient. Bitcoin is doing its thing on the daily. It's just holding this kind of move without knowing what to do, if it rips or if it just flash. I mean, there's a lot of uncertainty and confusion. There's a lot of confusion in these markets. We check the dollar again after this breakdown, 61.8 retracement, pull up, pull down again. Look at this candle, this bullish candle, this demand down here. But look at this choppiness. This is just insane volatility on the dollar. Still, I think we are going to see this trend line that is getting rejected at some point with this kind of structure bottoming out. I think we are going to see a move higher, but we have to be really, really patient. We really have to be patient here. And let's see what happens. Yields are in the red, 10 years minus 2%. And bonds market are still pricing in the same thing. Treasuries are flying today, plus 1.55% in the green. And Tesla is also doing pretty good. I was thinking that perhaps we were going to feel this huge gap back in January, but looks like we are holding, and maybe we are going to feel this gap and then going down. Tesla, Amazon, Meta, all those are consumer discretionary stocks in the consumer discretionary sector, and I think they are going to feel the pressure at some point. And these gaps, these inefficiencies in the market need to be filled up. Today, maybe it's not the day, but again, patience. Tesla is right now breaking up 164. Super bullish. It's 2.37%. Still choppy. I still think we have this gap to be filled in order to do things like going up and then reject, not A. So things like fill the gap, then go down. Things like this, I think we are going to see plenty. On Apple, also on the daily, filling this gap. All these gaps that are left behind need to be filled up. Right now, Apple is quite tricky because it's just shopping around and it's moving the market. and Microsoft also barely green, 0.04. But as you can see, these markets are super difficult to trade. Crude oil filled the gap, this gap, found buyers at 74, and it's now putting a nice 2.60% on the day. So, I mean, there's a lot of confusion in the market, divergences, some convergences, some banks going up, down, and despite that, we are still going up somehow. So this market is really tough. One thing that we have to notice: XLU utilities in the green, XLP staples in the green, and XLV 1% healthcare. All these sectors are defensive sectors. And I think Wall Street keeps rotating to them because of the uncertainty on the technology after earnings and also on the consumer discretionary after some outlook that came with earnings. So be really careful. Anything can happen. The S&Ps today are quite strong. They have a nice break of trend on the daily. This is the futures. We have potential to break this kind of structure, and Nasdaq is already putting a nice push towards the end of the week to really reach last week high and break to the upside. I don't discard this, but this doesn't mean that next week and upcoming weeks will do that. So just be patient. Timing is everything. Timing is everything. So I think that's all from my side. I mean, if you have to take something from these videos from my channel, I hope it's discipline, patience, and risk management. These kind of setups happen every day, every week. Just have to wait for those opportunities. Have your edge, your strategy, and just try to survive until you thrive. That's my best advice and recommendations. Just be patient. These markets are really tough. There's a lot of speculation, manipulation, and politics. So be really careful. No one said never that trading was easy. So don't make it worse by just not following your rules and your process. Just be patient, be disciplined, develop your strategy, and keep always risk management on. So that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always, but there's still a lot of day today. We are approaching the finish of lunch hour, 1 p.m. into the power hour. Everything can happen. Last day of trading of the month, last day of the week. Be careful. Don't ruin your week, your month, your day. Thank you for your time, and remember that discipline and risk management are key for success. Stay safe, everyone.